Let's see if that actually works. There we go. Welcome back, everybody, to another stock market live stream. So we'll see if this functions. We got this another one of these like software updates, but every time you do a software update, like buttons just go in different places, and I'm like, I don't know where they moved everything to. So I don't even know how to turn on the stream anymore for these other platforms. So I don't know what they did here, but oh well, we'll have to figure it out oh, there we go. Okay. All right, here we go. Just, I guess, all in different places now, but it's okay. We'll get to the bottom of this. Together, we'll get to the bottom of this. Let's try. If I press that button, maybe it'll work. Anyway, welcome on back to another stock market stream. We've got, it's a solid red day today. You know, solid red day. I actually thought with those ADP numbers that we were going to get some bullishness today. I think so far, that doesn't look like it's going to be right. I did buy a little bit of the dip, though. I did some selling. Specifically, there's one stock that has done very, very well that I've done some more selling of, and I did a little bit of buying, went a little shopping this morning. This isn't a foregone conclusion that Kevin thinks that's it. The recession is over. There's no recession. It's just, hey, I've got a shopping list of stocks that I want to own more of over the next 10 years. And so I did a little bit of buy-ly do-lying. Now, I'm also of the mindset that the fact that we're consolidating around 595-ish is both good and bad. One, volume is like trash today. Like buyers are just not showing up to this market. Look how volume is just decaying. Now we're getting a little bit of volume spike over here. We saw a little bit of volume sort of maturation here when we had the Anthropic news. But so far, not enough to keep buyers showing up. So a little bit of a sign, maybe people just don't have buying power anymore, right? That the dry powder is gone. People are maxed out on debt. But these are very, very unaggressive moves to the upside here and large moves to the downside. You can see that obviously on the 1 minute candlesticks. I still maintain I think there's a good shot of recovering 595 today. I'm hopeful. But man, we'll see. It has been a bleed of a morning, especially the first 30 minutes. You tank right through 595. So that's what I'm going to be watching for today. You do have Tesla that's got a little bit of an uptrend here, which is nice. Meta, not much though. Buyers aren't showing up today. Nvidia before earnings, it's like you've got nervousness because of data. You did get some unemployment claims that came in a little hotter than expected, though the ADP numbers were not that bad. They're not great. You had on ADP numbers, you were negative 2,500 for the 4 weeks ending in October, which somewhat wipes away some of the enthusiasm that you've seen on the October ADP report, which indicated a positive read of 42,000. Hopefully by now you've seen, if you haven't yet, go watch it, the take from Waller on recession. Now that doesn't necessarily mean that the rest of the Fed obviously agrees with him. So we'll see what happens there. You did also have AMD plow right through 232, which was disappointing. 232 is a number that we've actually bounced on a lot. It does make me feel like intraday today things are a little oversold. Same with the Qs. Just no respect really for the lines. And sometimes those oversold conditions do lead to some near-term rebounding. Do I think that, we're going to be going back to all-time highs here on the Qs anytime soon? No. But, over the next few days, could we see a push back up? Maybe I don't know if we'll make it to 617, but something over the sixes. It wouldn't surprise me. So we'll see. We'll have some patience here for what that's worth, and we'll see if we can rebound a little bit. So with all that, let's go take a look at some of the news this morning. There was news out of Tesla this morning regarding the regarding robotaxi accidents, and then also a robotaxi safety monitor falling asleep at the wheel, then it makes you wonder, like, maybe that's actually a good test. Like if they're falling asleep. But you actually have sort of this ongoing, like, Reddit list where people have been, kind of keeping track of little video clips of robotaxis doing silly things. Like, robotaxi going 26 and 15. Okay, it's not good, but, like, not terrible, right? You've got robotaxi drives into oncoming lane. I think that was one of the first ones that we saw. Safety monitor moving to driver's seat to intervene. This happens. Robotaxi can't get out of parking lot. Maybe not necessarily that bad. It doesn't look like we actually have robotaxi actually causing damage on video, unfortunately, because it'd be nice to see that on video. But, Electrek, which is the best place to go if you ever want a bear take on Tesla, is apparently now reporting you've got a driver. The good news, the system did wake him up. Okay, but was that because somebody was monitoring and woke him up? Or what woke him up? Poor guy. Overworked trying to make some hours being a safety monitor. I mean, talk about, I hate to say it, but it's a boring job. Okay. I hear the blinker. Oh, yeah. And then he wakes up. Well, hold on a sec. Let me see if we can hear anything better there. Let me see if I can adjust our audio just a smidge. No, that's all the audio we have. That's interesting. So, all right. I mean, maybe not the biggest of deals here, but I do think that this is interesting. They have a little incident chart over here, and they indicate that robotaxis have had 7 incidents that have caused property damage, or at least 5. It looks like maybe 5 of these have caused property damage. This one says minor, so maybe not. Looks like 5 out of 7 may have caused property damage. July 5th, 9th, 7th, September 7th, September 4th, September 6th. So, hey, I mean, we could put up the sign. Like, we're like 2 months without an accident over here. That's good. And it seems like so far these are relatively minor. It's not like you've had a, crazy incident here of some form of an accident where, somebody's walking away with their leg broken, snapped in half or something. That obviously would be quite dramatic. So I don't know that that's too terribly interesting, frankly. I mean, you would expect there to be some little incidents, right? All right, let's see what the Journal's got here. So we've got Trump's grip on Republicans shows first sign of slipping. We've got, yes, we want no banana tariffs. Yeah, don't tariff my banana. Okay, AI bubble fears hammer the stock market for the 4th straight day. Yeah, whatever. It'd be so great if we could just rebound and go green like today. That'd be great. That would be wonderful. A nice, confirmation of 595 and up from there, baby. That's what I want. That's what I want. So let's see here. Let's go to the inf. See what the inf's got for us today, because probably the Anthropic deal, huh? Pinterest AI strategy focuses on what users want. Honestly, Pinterest, I wonder how their charts have been. I'm pretty sure it's been in the toilet. Okay, Qs are back at 595. Don't look at it. Don't look. Knock on wood. Okay, let's zoom out a little bit here. Yeah, Pin's been in the toilet. Mm-hmm. Now, are we almost at COVID levels? No, not quite. Not quite COVID low. Let's see here. Trend line. Oops, that's not what I wanted to do. I want a trend line. Oh, wow. Look how beautiful that looks. Oh, man. I mean, that's quite nice. 1, 2, 3, 4, 5, 4 to 5 target bounces here. Not bad. What about Adobe? Because Adobe's been trying to hold this triple bounce over here. 1, 2, 3. And even recently, 1, 2, 3, you can kind of look a little closer. But it's been failing. Okay, Tesla back over 4. Let's go. Kevin says something bullish about Tesla. We get big green candles. Okay, all right. NVIDIA. All right, let's see here. So Pinterest AI strat. What do we have here? 3 years ago, no shortage of tech companies who business, as potential victims for chatbots, blah, 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 blah. This is Fugazi here, digital scrapbooking firm. I think they used a lot of AI really just to deploy their advertisements. And nobody really wants to feel like they're being advertised to. But I will say, their ability to promote you things that you might like through ads is actually pretty spot on. They're pretty good. I almost sometimes think the advertised products are better than there we go. Advertised products are sometimes a little better than even what you might want to pick, which is kind of crazy, but it does somewhat indicate some of the strength of their AI offering. Okay, digital scrapbooking firm. Let's see here. Wall Street AI threat to Pinterest. I don't think Pinterest fate is in their hands. Kindness to chatbots. Blah. Adopting AI features in its ad formats. Doing so carefully not to alienate users. All right, yeah, this is boring. It's none of that. I mean, it needs to show up at their earnings for it to be really exciting, right? If it shows up at their earnings, and we can get excited. But until then, what good does it do? All right. So Databricks in talks to raise capital. Everybody wants to be in talks to raise capital. Who doesn't? Makes sense to me. Blockchain.com plans to go public in 2026. Adds co-CEO. Gemini 3 arrives. What Google has that OpenAI doesn't? Google.com or YouTube. Let's see here. Oh, the tensor processing. Other data points post to Google's progress, including their tensor processing units, accelerating the growth of the Google Cloud, vertically integrated. Google is already vertically integrated. Right, and OpenAI wants to be. Okay, yeah, that's fair. All right, well, that's boring. Somebody has a MU sad face. Oh, let's see what your MU sad face is. So there's NVIDIA, a little, let's see. Oh, so rejecting again at 595? Come on, man, step it up, bro. What is this? MU. Micron's down about 5%. But dude, Micron's had such a great run. How could you be sad about Micron? Like, if you're investing in Micron, you should be so... should be no problem there. Let's see if we can fix this. A little extra camera I really want to use. But it's being lame. Anyway, but yeah, I mean, like, dude. Oh. And if you're sad, you got to ask yourself, are you too heavily exposed to margin, right? Somebody here says Gemini 3 is trained solely on TPU. Is that true? Let me see. Gemini 3 trained solely on TPU. I'll just do a quick little Google here. Okay. Google unveils, let's see if they say. Google unveiled Gemini 3. Its newest proprietary model, Tensor. Oh, TPU. Executives emphasize the integration reflects Google's control of TPU hardware. Data center infrastructure. Okay. So where did you see that? Gemini. Tensor? No. TPU? I don't know where you're seeing that. It was for sure exclusively trained on this. But maybe you can point me to that. Somebody writes everybody's max margin. That's my concern, is that people are max margin right now, and it's somewhat, keeping a lid on the ability of the market to move. You could see this frustration here in, well, frankly, what do we got here? Oh, there we go. Okay, I got that one working. Let's go. Okay, perfect. That's the camera I wanted. Good. Okay, cool. So now I can flip it around. Oh, interesting. It seems like to get that stupid camera working, which is really dumb, I guess I have to unplug it and replug it in every day. It's kind of like that old famous line, like, oh, want your device to work? Just unplug it and replug it back in. See, what a mess. Oh, but maybe I can rotate it around. See, look, what is this? What is this? Okay, we're zoomed in correctly. This is Oh, there we go. There we go. Come on. Hey, what up? Okay, perfect. Cool. Great. All right, so I'll deal with that later. Good. Okay. I figured out the problem for that, though. That's good. So anyway, so let's see here. Okay, Microsoft. We've got actually a nice bounce right here. Look at this bounce right now. You've got a bounce on Microsoft. You've got a bounce on the Qs. Bounce on Meta. Okay, Microsoft Meta, that's 2 of the Mag 7. Tesla's bouncing, that's 3. Apple's bouncing, that's 4. Nvidia's bouncing, that's 5. Netflix, I don't know if I already counted them. I may have. I can't remember. Where's Google? Is Google bouncing? Google's bouncing too, bro. This is actually good. This is good. We could be setting up for a nice intraday rebound here. Right here. 595 line. Let's get some bullishness going into NVIDIA earnings and the September jobs reports. I honestly have a very hard time believing that we're going to have some horrible, report from NVIDIA. I have a hard time believing that. Now, I personally think, I've done great on NVIDIA. I don't mind taking some of my NVIDIA money and throwing it into some of my other longer term plays, because I think in the very long term, these other plays are going to outperform NVIDIA at this point. But if I was a betting man, I feel like it's hard to bet against NVIDIA for earnings. So what else do we have? This is actually quiet on the news day, eh? A little quiet. We had a little bit of Fed speak. So far, the Fed speak isn't anything remarkable. We had the most interesting one we posted a video about this morning. All right, let's see. NVIDIA's test of 180 coincides with, what is this? Could be the slide. 180 has served for as a floor for NVIDIA since September. That's good. Weak jobs data keeps a Fed rate cut in play. Initial claims moving up a little bit. September's payrolls report may add to the confusion, with forecasters expecting a 55,000 job increase. That's true. History suggests this dip is not the big one. Oh, that's good. Let's see why. That'll give some people more money to go diversify into HouseHack. Go to househack.com, read the offering circular, also now known as reinvest, and diversify some of your wealth to real estate. I don't know how you could go wrong if you're doing really well in stocks, diversifying some of it to real estate. And why, we don't charge an asset management fee. We don't charge a 1% acquisition fee or 1% renovation fee or 1% loan fee. We don't have any loans anyway. We don't charge a disposition fee. We don't charge a waterfall. You're investing in a company that's backed by real estate. I just think it's such a great, USP, unique selling proposition. All right, what is this? It feels like where we are with the equity market, the instant dip buyers have gone AWOL for the past 3 weeks. Yeah, that's true. That's one I prefer to buy. I don't like to buy when everybody else is buying. What do you think about the JGB spiking potential impact on the carry trade? Yeah, honestly, I think it's rare for lightning to strike. It's even more rare for lightning to strike twice in the same place. I don't really think that's going to be the issue. I think private credit has serious issues, but no, I don't think it's going to be the carry trade again. It could. That's not my bet. A reader, interesting. Is it time to sell covered calls? Ooh. Well, we should look at what volatility is looking like. Do y'all also see the sort of cringe BlackRock ad where they're kind of walking through? They're like, guys, private credit is great. More companies are trying to stay private for longer. You should get into private credit. And it's like, oh man. But nice bounce here on Bitcoin. Came off 89 there. Sub 90. Crazy. Where's Meta? Meta's got a little rebound too. Guys, look, the components of the Mag 7 are doing really well right now. Microsoft up, Tesla up, Meta up, Netflix up, NVIDIA up. Google, and Apple. All of the Mag 7 are trending up right now. You know, so this is good. VIX, somebody says 25. Yeah, let's go take a look at the volatility index. VIX vol, we're up about 10%. Actually, you're right. Could be an interesting day for either sell calls or sell puts, right? Let's go look at some volatility here. And looks like also the White House is doing some kind of ceremony. What is this?
In the president's tour globally was with
his tour,
the Middle East and Saudi Arabia, and now Saudi Arabia coming to the United States. As you can see, the delegation arriving as we speak.
Well, they
We're
came here on
anticipating
business.
MBS to be welcomed in for a one-on-one meeting with the president.
How many weeks did that take? Did they cross the land bridge at Russia in Sarah Palin's backyard? Where's the music? There's no music. Oh, arrival of the Saudi Crown Prince. What's he gonna be wearing? The white kind of. Oh no, he's got like the picnic table version. I don't know. Like maybe somebody can help me understand why they use the like. Sometimes they got the picnic table version, and then sometimes it's like all white. Maybe there's some kind of like religious reason for that. I don't know. But I mean, this is interesting. He's got a gold trimmed black robe. No, that's more of like a. No, never mind. That's something. I thought maybe he got like free arms. Also, kind of interesting because there's no audio. Oh. Just have like cars in the background. Okay, anyway. So let's go look at let's see. Let's go look at the volatility index. Let's go with Tesla, for example. And let's look at the short volatility. So the volatility right now on Tesla is actually mid-range on the 10-day. That's not that exciting. On the 5-day, it's mid-range, so it's not that exciting. But that's good. Get a little flyover. Bravo does 22. That's 22. Meta's volatility is actually low. Calls, baby? Who are your calls? Use volatility is a little bit on the side, bro. Where's the volatility, man?
For Saudi
Nvidia.
Prince Mohammed bin Salman, known as MBS, as he enters the White House. Administration's got a close relationship, close ties
AMD's
with
low.
the Saudi kingdom, and the president aiming to...
Bro, I don't care. Micron's a little elevated on volatility. I bet you Oklo's high. Dude, no, Oklo's low too. Why is volatility so freaking damn low? Did the audio go bad? What happened? Is this better? How's this audio? I don't know what happened to the audio. But anyway, maybe this is better. So, yeah, Microsoft's volatility is better. Interesting. Microsoft's volatility is up. And if I go look at Microsoft, they could actually be interesting then for... I wonder how much they're paying for sold puts. Let's go over here. Let's go to January and let's look at some sold puts. Sold puts. About 4%. You can get about 4%. Okay. All right. That's interesting. And then the Qs. This is a good rebound right here. Let's see if we can go green today. Folks, green is what we want today. We want to be positive 40 basis points, okay? That's my goal today. Positive 40 bipples. That's the goal. See if we can get it. All right, top news today. Microsoft Nvidia to invest $15 billion in Anthropic. S&P, largest slump since August. Who cares? We're coming back, baby. Cloudflare resolves their poopy-doopy issue. Home Depot fall. Oh, yeah, did you hear the Home Depot news? I guess they're complaining about people not buying, wanting to do larger projects. Which, I mean, really, it doesn't surprise me. Like, this is not the time to take on big projects. This is the time to raise cash and protect your butt. You know, that's what the time is that we're in right now. And I'm not saying don't buy. I bought the dip this morning. You know, I bought like the lows of the day this morning while we were actually on our alpha report and covering it with course members, which remember, you can join that and just join at meetkevin.com. You pay once, you get lifetime access. But I'm like, hey guys, right here in front of you, I'm buying. Here's what I'm buying. So, you know, people are like, oh, but Kevin, the titles of the videos are bearish. So, like, if you actually look at the content, you know, there's an argument to be made for both sides. Are there really big recession risk? Absolutely. That's why I like not having debt. But anyway, let's write this down with Home Depot and some Fed news. So Home Depot. What do we have? So the Home Depot news. Keep an eye on this. Home Depot news is they cut full year guidance. Well, that's not great. Okay. Consumers are hitting pause. Okay. Since Labor Day, something has happened. Okay. Six Flags this morning, not this morning, but they, in their last earnings report, also warned that consumers have slowed down since Labor Day. That's something to pay attention to. We've got EPS expected to decline 5% from a year ago, lower than its previous forecast. The company said profit and comp sales came in lower than expected last quarter, citing overall weakness in the housing market. And we've got some storms, I guess, that hampered or created some issues as well. Okay. Home Depot's bleak forecast is another warning for consumers. And then, of course, we'll get Target and Walmart soon as well. I want to see if there's more here on the Fed. And not just the Fed, but also, let's see here if CNBC has anything juice for us. Really? Nothing? Ooh, I think I broke the TV. I think today I'm just like breaking things, like software problems. But it's okay. It's okay. We will get to the bottom of it. All right, there we go. Yeah? No, whatever. Okay, so I just want to make sure I'm also paying attention to any potential headlines coming out of Trump. Just make sure we don't get any kind of like crazy Trump dump. But I don't think we're getting any new tariffs announced anytime soon. So, missed our expectations primarily due to lack of storms. Oh yeah, it does say that. Citing overall weakness in the housing market and a lack of storms. Oh, that's an interesting line. You know, that's actually also very interesting. So, Home Depot complains about lack of storms and weak housing. Okay, you ready for this? Six Flags said bad weather led to lower sales. Well, which is it, bro? It's like these people are like literally just choose, you know, what feeds their narrative or something here. We'd expected demand to begin accelerating in the second half, but ongoing consumer uncertainty is affecting this. See, that's another thing. A lot of people have been expecting this push. Six Flags and Home Depot both expected acceleration in Q4, and both are saying they're not seeing it. So the hope, and this has been my concern post-liberation. Post-liberation has been hope may not materialize, right? That's not great. Somebody says hurricanes are money printing. Yeah, I mean, I hate to say it. I mean, hurricanes don't contribute really well to GDP because they kind of rob parts of GDP. But yeah, I mean, hurricanes are going to do something to increase spending over at Home Depot, that's for sure. Bro, what is going on? Why can I not? Let me see real quick. This is pissing me off. TV's on. Why is it not functioning? It's just one of those days. It's one of those days. Things just don't want to work today. And it's driving me nuts. Yeah. Whatever. Okay. So, Home Depot, housing market remains frozen, high interest rates, tariffs have added challenges, consumer uncertainty, weighing. Yeah, I mean, the University of Michigan reports are not great. I mean, that's the same thing that we saw Waller talk about this morning, right? And it's like, hey, guys, yeah, you know, this isn't looking good. Then, Barkin, demand is healthy, but not translating to hiring. Okay, that's interesting. So Fed Barkin, he's coming out saying demand healthy, but not translating into hiring. Okay. Then we have economy is still very healthy. Yeah, see, I don't know if I believe that when these people say that. It always drives me nuts when they do that. You know, this idea that, oh, guys, yeah, no, everything's fine. I don't know how I feel about that. Sometimes I feel like the Fed does gaslight because they have to. You know, that is a concern I have, that they have to gaslight, because if they didn't gaslight, then they would end up, well, essentially creating the very damage that they're trying to avoid, right? That's, I think, a very real risk, and it makes sense, but it still sucks, because then it's like, okay, well, like, can we trust these people, you know? And the answer to that's probably no, right? But hopefully. Okay, so economy's still very healthy. Barkin says firms are increasing productivity but opting not to hire. Inflation's still elevated but unlikely to increase much. Okay, I mean, that's fine. Inflation elevated. Inflation elevated but unlikely to increase much, right? Okay, we like hearing that. And then Barkin, firms report plenty of applicants per job openings. That's a new one. Firms report plenty of applicants for job openings. Okay. Barr talks about banking supervision. Okay, well, that's not fun. That's boring. Okay. Cool. So, what else? Let's see what else there is. Somebody says they're adding to their MicroStrategy short. Oh, no. Yeah, I am not the biggest fan of MicroStrategy, or worse, Stretch. Maybe today we'll finally do the Stretch report. Nah, probably not. Maybe I'll do it later. Ooh, dude, Tesla, though. Look at this. I mean, look at the components here. Tesla ran up to 404. That's nice. Good recovery. NVIDIA's still up. Google slightly turning here. Netflix is still up. Meta's still up. Microsoft flattening a little bit, coming back to 232. That's bullish, baby. Bullish, baby, on the on AMD is good for tech. Regaining 232 is bullish, bullish. Where's my button?
Bullish catalyst.
Okay. VIX is relaxing, which is good. Bitcoin's still moving up. Let's look at the 5-minute. Yeah, nice moves up here. Okay. All right. Watch the cues here. Nice bottom we formed. Let's go grab some more news, especially since clearly I've broken the TV. Okay. So what do we have here? We have peace and quiet today. Larry Summers is deeply ashamed after Epstein emails. Yeah. DOJ case against Comey. Trump expects to push Saudi Arabia to normalize ties with Israel. Okay, boring. ICE makes shocking arrest. Oh, finally, I got it working again.
Be aware of Shopify.
There we go. Finally. Too bad they're boring. Let me make sure the audio works.
And so this year we're celebrating 25 years of Inside Onsite.
I really don't care. But I'm grateful it's on again. Because I just, like, in case, like, crap hits the fan or whatever, I like to be able to just sort of, like, look and observe. Although often we, like, when crap hits the fan, we see it before they do. Which is kind of cool. Okay. So, nothing newsy here. Nothing news with the Fed. We talked a little bit about the Tesla thing. Hedge funds on Argentina bet. U.S. toy makers struggles to cut ties with China. Is that Mattel? That's probably a Mattel report. Oh no, this is a different one. Okay, whatever. Okay. Let's see. Report details would-be assassins' online activity for Trump. Oh, that's interesting.
Miranda Devine revealing extensive online history tied to Trump's attempted assassin, Thomas Crooks, after officials claimed he had no digital footprint. Crooks reportedly left a trail of extremist posts, including about mass violence, political assassinations, and he shifted from pro-Trump to anti-Trump before the shooting.
Now we find out from a source that there is actually voluminous material that gives us an inkling about the trajectory that Thomas Crooks took to become a 20-year-old assassin. And it's not what the FBI had told us.
So let's bring in former Assistant FBI Director.
The FBI kept a secret? What?
You read this article, you know about the investigation. Where do you stand on this? What questions do you have?
Yeah, well, here's the scary proposition that this Post article raises, and that's...
somebody in the chat is misunderstanding what I said about the storms. The storms comment was that Home Depot is saying there were too few storms, and therefore we didn't see damage and repairs, so less earnings from that. Six Flags is saying there were too many storms, and that's why people didn't show up at Six Flags. So that's why I'm like, which is it? I mean, I guess maybe, like, different levels of storms. But anyway, interesting.
Surfing the social media sites and the internet looking for someone like Crooks who they can then groom and weaponize and turn into, you know, an assassin, as may have happened in this case. Now, Brian, I'm not sure how well the Post article was sourced in terms of forensics. It's a trick to go back and source and trace a posting back to a specific person. That can be very, very problematic. So I know the FBI has pushed back on this, but again, it raises that possibility, and I think so. You know, the Post
agree on
what did they omit?
On the internet.
A lot of the usual repositories of information have not yielded anything notable in terms of motive.
Well, first,
and they're just revealing these posts. How can you call other sheep, but you are too brainwashed to realize how dumb you are? I mean, you guys sound like a cult. IMO, the only way to fight the government is with terrorism-style attacks. Sneak a bomb into an essential building and set it off before anyone sees you. Track down important people and try to assassinate them. Wow. Murdered the Democrats in 2019. Well, I think he missed. Trump is the literal definition of patriot. Interesting. So you had this flip-flop in COVID. That's it. The shot did it. China implanted a 5G chip into him, and that's it. Bassett says everything is on the table.
We are doing better than we've ever done as a country. Prices are coming down. Thanksgiving is 25% less than it was last year under Sleepy Joe Biden. So, Sleepy Joe. My pledge to every family and every small business is that I will not rest until you are richer, stronger, more successful, happier, till you've gotten a piece of the American dream. The Biden administration started the affordability crisis, and my administration is ending it.
President Trump dialing up his affordability message yesterday while speaking at the McDonald's Impact Summit in Washington. The president told a crowd of McDonald's owners, operators, and suppliers his administration is making progress in combating inflation, but more work needs to be done. The president thanked the Golden Arches for his success on the campaign trail last year with his iconic stop at a Pennsylvania drive-thru. Meanwhile, the president also said that the government will begin issuing $2,000 tariff dividend checks in mid-2026. Here's Treasury Secretary Scott Bessent with me on Sunday. Watch. Secretary, is he going to be sending these direct payments to Americans of $2,000 or more?
We will see. We need legislation for that. And again, President Trump is all about solutions, Maria, and everything is on the table. President Trump has also talked about sending $2,000 refunds to, and that would be for working families. Will have an income limit. Those could go out. And then, Maria, the other thing that is going to happen in July, families are going to be able to apply for any child born from January 1st, 2026 for the next 3 years is going to get a
These are the Trump MAGA accounts. I need to have more kids.
Trump account. That's $1,000 for each newborn that's going to go in the stock market, and that's going to be invested for the next 18 years.
Joining me now is Pennsylvania Congressman Dan Mueser, a member of the House Financial Services and Small Business Committees. Congressman, great to see you. Thanks.
Are you guys going to, please ask if you're going to do the $2,000, because it's going to come down to Congress
so
doing
much
it.
for being here. What is your take on these $2,000 checks?
Yes, Maria! Maria!
Can that just be sent out from tariff revenue, or will you need to vote on it? How are you poised to vote?
Vote the vote.
Good morning, Maria. Always a pleasure to be with you. Well, look, the President Trump is about strengthening our economy. He's about delivering for the American people.
Bend the knees.
And he's focused on it like a laser beam all the time. We have some great things happening in our economy. You know, this whole inflation debate. Let's face it, you know, when Reagan came in, he took 2-3 years to start bringing down inflation with high interest rates. The president has corrected inflation just in 4, 5, 6, 8 months. He's corrected it. The inflation rate, the cumulative rate for the president over the last year is less than 2%. The cumulative rate under Joe Biden for 4 years was 20%. So we stopped inflation. Now we have to bring prices down. And on the tariff issue, look, we have a tariff dividend. We've got $300 billion that have come in from tariffs. So the president wants to use probably half of it to lower the deficit and the other half to deliver back to the American people, to spend, to thrive our economy. He's always thinking it's a great strategy.
To thrive our economy?
Well, I mean, look at the other side, though, Congressman. I mean, Senate Democrats are now calling for an investigation into what they claim was partisan messaging during the 43-day government shutdown. They want the Government Accountability Office to probe whether the Trump administration broke the law by blaming Democrats for the shutdown on federal websites, Congressman. Your reaction?
Comical. Shameless, the height of hypocrisy. I mean, I've stated that a lot lately about some of the Democrats' statements. Look, Elizabeth Warren, the one who brought the letter, go on her official Twitter site, go on her website. All she does is blame Republicans. Meanwhile, Senator Warren, all the Republicans, with the exception of a couple, voted to keep the government open. All the Democrats voted to close the government. It's real simple math there. And Blumenthal and Shifless Schiff, they're all the same. They're all on the letter sent asking for this review to take place. Meanwhile, they're completely guilty of what they're trying to accuse the president and us of. It's ridiculous. And you know where else? In Pennsylvania, Josh Shapiro. He's got all this negative messaging on Republicans. Meanwhile, not once did he say, hey, Democrats, maybe you should try to open up the government. So it's just shameless. Look, their whole goal is that the American people believe their lies more than they're informed of the truth. And fortunately, it failed.
Well, I mean, it's quite extraordinary to me that this is all they've got. I mean, like, for an entire campaign season, they were calling Republicans Nazis and fascists. I mean, so much so that, you know, like, mentally challenged people tried to kill President Trump. and assassinate him twice. And, the guy had fascist written on the bullet. So, I mean, there's that. And throughout all of this shutdown, 43 days, I believe the Republicans Senate tried to do a vote 15 times or 14 times. So is there any other way to say that it was the Democrats who kept the government closed?
There isn't, but they're going to keep on saying it. But then again, not just newsworthy stations like yourself and people like yourself, but even the Chris Cuomos of the world said, America, the Democrats are not telling you the truth. So there you have it. We know where it is. They caved. We're now moving forward, and we have great plans to do the things that the president and this Republican Congress have planned to do to strengthen our economy, our national security, and bring common sense to our society.
And, of course, then there's crime. I mean, ICE has arrested an Uzbek man earlier this month while he was...
All right. Yeah, this is boring. All right, I was hoping I'd say something about, like, oh, yeah, we're already planning to do this... what's it called? Your stimulus thing. We're gonna vote on it here. But these people don't know. Trump throws up these ideas, and they don't actually come up with any kind of real plans here. Anyway, all right. Let's see. Okay. Okay. Good. So, let's see here. Let's see here. Let me set this really quickly. There we go. That's done. And let me do this quickly here. And that's it. Okay, perfect. All right, good. So now let me see if our boy Patrick has anything. Chuck Schumer and AOC won't show up. Not ready for a woman president. Bob Iger should resign. Dumping millions into Georgia. Deep state tries to take out Trump. Tucker's explosive Thomas Crooks report alleges FBI cover-up. Where did they show this?
Trump shooter Thomas Crooks, he said FBI clearly knew, Rob. I think you got a clip on this one here. Is this the one? Go for it, Rob.
These remarks were especially notable because they came at the final phase of Crooks's YouTube commenting. At that point, a new character emerged into the conversation, a user named Willie Tepes, who started pressuring Crooks to commit violence. For example, quote, if a gun and a badge is all that is needed, then authority obviously comes from the barrel of a gun. We have more guns than they do. There is no way we can avoid a war at this point.
So are they trying to argue that, let me see here. Did Tucker Carlson basically post something about Crooks? Oh yeah, look at this. Tucker has a whole 34-minute piece. Who is Thomas Crooks? Interesting. I see. Chemtrails are worse than you think? And they show condensation coming out of the back of planes? Wow, he's really gotten into posting a lot. Look at this. He's doing like 3 posts a week. Stepping it up. He's got to get those Benjis coming in again, huh? All right. Let's see what the suits are up to. Sometimes the suits have good information for us because we obviously see, the Q's had a nice little rally here. We're slowing down a little bit. It's a low volume day. It was not a surprise we were going to get a bounce, but we're not getting like a really juiced up bounce here. Let's go to our long term, or I shouldn't say long term. Let's go to our suit reports. So if I look at, no, nothing fun there. Haven't seen this in a while. Let's take a look at the market here. Here's the market here. So haven't seen this in a while. SPX taking down the trend line. Look at this, below the 50-day moving average in quote-unquote ages. Nice. Yeah, we haven't taken that out since May. And that was already while we were on the on a rebound here. Okay, small caps puke. Oh yeah, did you see my and then extreme fear. My because VIX is going up today, so of course you're gonna have extreme fear now. I was comparing the IWM and Ethereum yesterday and the performance of each other. And obviously, we had a little bit of a Bitcoin jump this morning. But what's fascinating is if you compare small caps to Ethereum, while obviously Ethereum is more volatile, look at the difference here. The difference on the year performance is almost nothing. IWM has done 1.67% in performance. Ethereum has done -2. I mean, those are indistinguishably bad levels of performance. And then, of course, I joked, Ethereum, I was promised Ethereum at 7,000 and IWM to rally 40%. Well, we know there are people who get paid for being nothing but bullish, so, yeah. All right, let's see. Okay. Tucker, how's Politico doing? Politico, Cristiano Ronaldo is going to visit the White House on Tuesday. That's cool. White House plans to release health bill. Oh, well, that'll be interesting. I'd like to see the text of their health plan. That'd be nice. Congress wants to release all the files. Trump worries that won't be enough. Well, of course, because unless there's something that's like scathing, people aren't going to believe that we've gotten everything. And, so far, I don't think there's been anything like mega scathe. It's certainly been sus stuff. That raises the question. Google's boss says $1 trillion AI boom has elements of irrationality. Is that what he said?
Rory McIlroy.
Oh, 30-second ad. All right, well, let's just read it here. AI investment has been an extraordinary moment. There was some irrationality in the current boom. It comes amid fears that Silicon Valley is beyond a bubble. Asked whether Google would be immune to the impact of the AI bubble bursting, they said the tech giant could weather the potential storm. Yeah, no company's going to be immune, including us. Yep. All right. Stock market heading for a repeat of the dot-com boom and bust of the late 90s. Right. All right. Is the ad done yet? Oh, here it is.
Given the potential of this technology, the excitement is very rational. It's also true when we go through these investment cycles, there are moments we overshoot, right, collectively as an industry. We can look back at the internet right now. There was clearly a lot of excess investment, but none of us would question whether the internet was profound or did it drive a lot of impact. It's fundamentally changed how we work digitally as a society. I expect AI to be the same. So I think it's both rational and there are elements of irrationality through a moment like this.
All right. I mean, that's generic hedge statement. BRICS, Japan stalled immigration, fixing free trade, quasi-alliances, grand AI bargain. All right, all this is boring. The information, nothing over here. Oh, it's honestly a pretty low news day. That's why I want to look. Oh yeah, I was looking at the suits, and then I got distracted looking at the charts again. So the shutdown fallout. Let's see what Rabobank has to say. So Rabobank, longest shutdown in history has ended. Government is now funded through stopgap. Political fallout from the shutdown debacle could be dramatic. Waiting for announcements about delayed releases. However, the quality of the data has been compromised. Some of the data points may be lost forever. All right. Well, that's not useful. Thanks, Rabobank. Told me nothing. How about Mizuho? No. Japan. Promise and pressure. JP Morgan Outlook 2026. Oh, this looks fancy. This looks like they spent money on this. Oh, look how fancy this PDF is. It starts with like a whole leather binding. Oh, that's hot. Oh, that's cute. Look at that. We got like the Carrera tile that it's on. Oh, promise and pressure. Investing in the new frontier of AI. Fragmentation and inflation. Ooh. But look how beautiful it could be. Forward. 2025 has been a year of transition. Oh, that's one way to put it. Looking ahead, we'll focus on 3 powerful forces. The domination of AI, global frameworks, fragmentation, and inflation. The backdrop of 2026 is constructive for investing. I don't know about that. Wait, like, how do you not include the labor market in this? How are you so dense not to include the labor market in this list? Like maybe they have it somewhere else, but you're JP Morgan. You're the largest bank in the world. You are the definition of too big to fail, and you're just gonna ignore the labor market? You gotta be kidding me. We expect solid returns. In other words, guys, this leather-bound portfolio says don't sell. Don't sell. Okay. All right. Many clients holding more cash than they ever did before the pandemic. Oh, that's interesting. See, like, I always think of that as, like, contrarian bullish. Contrarian bullish? Okay. Oh, AI and labor. Here we go. New jobs born. I don't think you're going to get new jobs anytime soon. It's going to take a while, but we'll see what they say. AI. All right, this is just a summary. Part 1, the AI revolution. Blah, blah, blah. Models now hallucinate less. Yeah. Handle longer context windows. Also true. And demonstrate strong reasoning. Yeah, depending on your definition of reasoning. While the performance of AI models has stalled, the next leap could come from agentic AI. I don't know about that. But that is also interesting. This sort of stalling progress. Right? And this does create some fear. Like, what if this is it? Right? We all have really good chatbots now. Technological progress has spiked. Infrastructure investment. Yes, we know. Over 300,000 enterprise customers on Anthropic. The earnings of hyperscalers point to sustained demand and inference. Okay. Nearly 45% of businesses already pay for LLM subscriptions. It's probably more than that. How much is too much? AI investment is currently 1% of GDP. I don't think so. I think it's much more than that. But, I mean, maybe that's what it is now, and the planned expenses, I think, are closer probably to 5%. How will we know if this boom will become a bust? Is AI a bubble? Today, nearly 40% of the S&P 500's market cap feels the direct impact or perceptions from the realities of AI. Whether the upside or downside, it will certainly be a driver of market returns over the next few years. We must feel confident to see this is not a bubble burst. Okay. All right. Paradigm shift, railroad and internet booms. We do not yet see excess capacity. Data center vacancy rates are at a low of 1.6%. Okay, that's good. That's good.
Bullish catalyst.
All right. 3/4 of data center capacity under construction are already leased.
Bullish catalyst.
Okay. Computing power, scarce relative to demand. Scarce relative to demand.
Big PP.
Okay. All right. Bubbles expand because of cheap speculative capital driving prices higher. Tulip mania. Japanese asset bubble of the 80s. Subprime mortgages. Okay. Oracle's foray into the debt market was 5x oversubscribed. Really? And now you're getting the CDS surge? We think public markets will be willing to finance the largest tech companies. They're taking the bullish road here. decaying underwriting standards. Companies such as Lambda and CoreWeave have issued debt collateralized by high-end GPUs. Right. Alibaba recently announced a zero-coupon convertible to fund data center investment. Relatively straightforward features of capital markets so far. One could argue that circular investments could be an example of financial engineering. Yeah, I mean, they are. But they could also create a more symbiotic ecosystem for competition for software and hardware. Okay. All right. We're searching for signs that underwriting standards are deteriorating. To date, aggregate cash flows from operations still exceed capital expenditures so far. I mean, Amazon's like at break even, but okay. AI spending today is still fueled by cash flows. Okay. In every bubble, valuations increase beyond what cash flows or valuations justify. During .com, companies went public with no revenues. It's true, Cisco's revenues were trash. This is true. AI companies have generated returns entirely through their earnings growth. I mean, yeah, that's fair. That is fair. Every bubble has attracted new participants. It seems clear the ingredients for a market bubble are present. That said, we think the risk of a bubble forming in the future is greater than the risk that we might be at the height of one now. Oh, man. Oh, just talk bullish to me.
Bullish catalyst.
They're basically saying we might be setting up for the bubble, but we're not in a bubble yet. Wow. Seeing if you could show us how to purchase a call. Touch on how... Yeah, I mean, that sounds like a lecture. I mean, you know, we're covering the news right now. I appreciate the $10, but I mean, you know, be careful with options, man. Options are extremely volatile. Yeah, I feel like if you want to start with options, you start by selling a put, like long, like further out, and kind of feel it. And not a lot either. Cash secured, baby. But look into that. Look into cash secured puts. Moving past the AI bubble debate. History provides no clear pattern for what companies will ultimately capture. Right. That's not necessarily the most bullish, but okay. All right. So JP Morgan thinks the bubble is ahead. That's why they think 2026 is going to be good. The biggest risk is not having exposure. Wow. Talk about bullish. Performance of recent IPOs, not that great. They're using recent IPOs? I mean, I guess. So basically, JPM is saying because cash flows are sustaining spending so far and IPOs aren't mooning, we're not in euphoria yet. Okay, I get the argument. I get it. I still think they're ignoring the labor market, but let's see what they say. Here's the labor market piece. We know in the long term, technology creates jobs. The question is the short term. Okay, so we don't question that technology creates jobs. We see limited evidence that AI has impacted the market yet. I agree with that. I think it's just the hiring, and that's hard evidence to collect. Unemployment rates in AI disrupted sectors are lower than unemployment rates in insulated sectors. Right, but you're also ignoring the impact of the labor market on the economy. Potential limits to AI expansion, power. Now, old news. Let's see here. Data privacy, AI solutions. I left I thought this was really interesting. I was at a restaurant with Lauren, and I feel like this is a little bit of like an AI kind of function. It's kind of cool. But the credit card that I use, they're like, is this the tip you left? Hi there. I noticed a 34% tip on your recent restaurant bill. While some are tipping a little extra these days to support businesses and workers they love, I want to make sure this tip is correct. 30.49, so $30.49 bill, $10.51 tip, $41 total. Yeah, that was me. But I thought it was kind of interesting. Okay. Regulators will take notice as AI models improve and start to appear in the physical world, right? Privacy debates for investors, engagement, okay. Industry's reliance on carbons heightens the risk of global warming. That's fair. Particularly the critical minerals investment opportunities. Yeah, but be careful. MP Materials a meme. Okay. Phoenix recently updated their zoning to define data centers as their own category, so developers can address health and safety concerns before issues begin. Okay. Crafting the 4-part strategy to capture value. Okay. In 2026, our goal is to manage these risks. Okay, so what's your plan for 2026? First part of the strategy are the large cap leaders. Well, people doubt that they'll ultimately realize a strong return on their capital. We are optimistic, in part because of the 4 original hyperscalers, Microsoft, Meta, Alphabet, Amazon, are already growing earnings at a 20% pace. If you adjust for their growth, their valuation premiums seem justified. Meta seems cheap. So does Netflix, honestly. Let's see. Free cash flow at Microsoft and Google will exceed 2024 levels in 2026 after falling in 25. Eventually, we expect the AI boom will create a new generation of tech leaders. Still, we don't think 2026 will be the year when today's market leadership will falter. Yeah, like, I think if things fall, they all fall together. I agree with that. I actually agree with that. I agree. If we fall into recession, we're not going to see the Mag 7 become the Mag losers, but everyone will lose together, is my take. Right. These will probably still be, safer places to hide in terms of bankruptcy risk. We don't think they're going to go bankrupt. Second part of the story. Second part of our strategy highlights the enablers of AI. Okay, semis and stuff. Yeah, okay. Study. GPT-5 consumes 2.5 times the energy as a GPT-4 prompt. Okay. These create interesting opportunities in electrical equipment suppliers. I'm still like a little tempted by S-Edge. Little bit. They've had some pain. But yeah, they've had quite a bit. I don't own them, but I like looking at stocks when they're falling. Okay, I love it. I love nothing more. We're at the 100-day moving average on S-Edge. I love looking at stocks when they're down. I don't really care about stocks when they're up. Like Apple, at this all-time high level, I don't really care. It's not exciting to me. Look at fun, folks. Okay, they're not having fun. Look at this. You look at the week chart for fun. You think they're having fun? You think that's fun? It's not fun. It's not fun at all. What's AMD doing? Dude, AMD, you need to hold 232 and you freaking reject it. That's bearish. Bearish catalyst. Damn it. Anyway. Meanwhile, demand for semiconductors outstrips supply. We had a whole setup this morning around that 232 line in the Alpha report. Meanwhile, demand for semiconductors still outstrips supply. NVIDIA Blackwell chip is expected to sell out over the next 12 months. That's true. Although power and semis are the most obvious place for opportunities, we see opportunities in transformers, networking equipment, fiber, subsea cables, and liquid cooling. Liquid cooling would be like Vertiv, although I'm pretty sure they're also at all-time highs. Yeah, bro. Come on, man. It's the problem. The problem is I think a lot of these have been played. So, IMO, many here played. MU, Vertiv, MP. They've had their run, right? Including rare earths. Let me look at Sim. Although Walmart's pissing me off for Sim. Sim's retraced to 52. You know, it's not like a juicy level where it's like, oh my gosh, back up the truck and buy it. What are some others? Give me some more tickers here, folks. Oracle, I'm not the biggest fan of Oracle. I think they're, even during this run-up, I'm like, too much debt, too debt-laden. You know, Ubiquiti's recently had a little bit of a drawdown. CoreWeave's in no man's land. Mortgage Play's moving up a little bit. How do I feel about the 3-2-1 buy down for new construction duplex in this environment? Positive cash flow for 3 years. I don't like 3-2-1 buy down. I just don't like buy downs at all usually. I mean, I get it, but you know, new construction, you're going to be buying a little bit higher in the market. You know, that you're offsetting that with cash flow, but your cash flow is not going to be anywhere near that overpayment you're making. I mean, hey, you maybe give me the where are you thinking of buying, Cody? Lucid, Dell, let me see, ASST, I don't even know what that is. Oh, Space Mobile. Space Mobile's been rocketing. Space Mobile has done exceptionally well here. CMG, bro, what does CMG have to do with AI, bro? You know, all the consumer plays are just getting reamed. Lucid, yeah, bro, come, I can't even see where their chart is, bro. They've fallen below my floor. I mean, holy smokes, poor Lucid. Extremely CapEx business. Terrible time to try to sell cars, honestly. Salesforce just never had the AI sex appeal, huh? Oh, is Supermicro gone down? Adobe on the triple bounce line, man. I'm telling you, I'm looking at Adobe all the time. Dude, Supermicro at 34. That's nice. You know? Better, you know, Adobe and SMCI on bullish rebound, you know, maybe. I actually like that. I like that. I agree with that. You know, yeah. And these give me a little less risk than the consumer plays. And Adobe, a bit less, well, actually quite a bit less risky. Likely less risky than Fun, Play, CMG, you know, Home Depot as consumer falters, you know, TGT, but very tempting basket. Like, I'm so tempted by Target and Fun and Dave & Buster's, and I promise you, if I buy any of those, I will send you an alert in the Alpha Report. That's my goal. My job is to send you, you know, trade alerts on where my head is. They're not financial advice, they're just ideas. But no, you know, I'm still nervous about these right now. I mean, we just went through the Fun earnings call this morning, you know, and it wasn't fun. It wasn't fun. We went through Walmart yesterday and today, actually, and I was pissed, bro. We actually used Walmart this morning in the Alpha Report to show you how AI could literally mislead you and lie to you. And we exposed it. We exposed Gemini this morning for lying to us in a financial report. But that's okay, because I don't look at financial reports with AI. But, you know, maybe after the fact, and we're like, did I miss anything? But no, just use your brain. Third, we want to find businesses that are successfully developing AI to grow revenue and profits. You know what this company is? Hopefully, House Hack. You know what I really want to do? And I'm just going to be transparent here. Well, A, mostly because I hope to farm your feedback on it, but also B, because I think it's interesting as an insight for you. Like, I'm not trying to pitch you House Hack here. To avoid any doubt, read the offering circular at househack.com. 5% yield is a convertible bond. You get all the upside in the stock. And read about that in the offering circular at househack.com or reinvest.co. Same company. All right. So, like, something with House Hack, what I really want to do, I want to launch our AI beta, you know, super early beta of our, you know, wedge finder. We're calling Reinvest AI, right? And it's basically, we're going to provide AI scoring to help, you know, we're calling it the Reinvest score, or, you know, Reinvest AI score, to help you build your wealth via real estate. And, you know, we start with single families, then we go into renovations, then we go into valuations, and then we go from there. And so it's sort of like prioritizing deals, prioritizing deal flow. But what I want to do is offer people, because it's hard, like when something's so early in a beta, it's hard to be like, oh, yo, you know, you're going to get all your value immediately. Can't do that because it's an early beta. It's like you're not. The value's going to grow. So we're tempted to do something where we basically like have some kind of, for like subscribers or course members or whatever, before we sell this mainstream at all, we want to do something where we basically give people the option to buy like, you know, at a relatively cheap price on a monthly basis, but basically buy like 2 to 4 years of membership to the AI, you know, and then that like basically funds the full build out of our stack. You know, the renovations AI, perfecting the deal prioritization, the valuation AI. And so that's our game plan for this. And so we want to see if we can be part of this group of businesses that are successfully developing AI to grow revenues and profits. Because if we do this really well and people really like this membership, then, you know, our revenues are going to explode. And so we'll see. And also, I don't think people like want to buy a house necessarily tomorrow. So, you know, if you sign up for it for the next like 3 years, as an example, it kind of butters out your opportunity to use the product, and it gets better over time, right? So that's interesting to me. Somebody says, does HouseHack still offer the 5% yield? Yeah, which is interesting because that means HouseHack has yielded more than Ethereum and IWM on an annualized basis over the last 12 months. It's kind of cool. Anyway, yeah, this isn't supposed to be a HouseHack pitch. I just wanted to mention that because they said this here. Read the disclosures over at househack.com. There's risk with every investment. Let's see here. All right, so Supermicro, I like that it's actually come down. Okay, how are the queues doing right now? Bro, I gotta go to the bathroom. Struggling to stay above 595. Come on. For example, cloud businesses at Microsoft and Google grew 4 percentage points faster. Nearly 2/3 of the equity market is in the top quintiles of AI adoption. Said differently, the current crop of winners is likely to compound gains faster due to more efficient integration of AI. This is interesting. They're basically saying that the big businesses, the big companies like Google, may compound AI integration faster. I mean, they're not wrong. You know, Gemini Chrome plugin, Gmail integration, Drive integration. You know what we did? We took our, I should talk about this, the HouseHack Circular podcast, okay? So we literally went into our Google Drive and we clicked on our offering Circular for HouseHack, and I clicked the audio button, and it literally turned it into a podcast. Like, there was like this woman, AI bot or whatever. Yeah, so today we're going to be looking at this HouseHack Regulation A offering circular. And then the guy's like, yeah, this is an interesting one. It sounds like they have two primary ways that they are looking to make money. One is this more traditional, they call it the wedge deal finding model. It was so interesting to hear it. I'm like, oh my gosh, this is freaking weird, man. Somebody here writes, hi, Kevin, your subscription saved me a lot of bad moves. Thank you. By the way, I'm not a spammer. Thank you. That's really nice of you to say. Yeah, I try my best every day. That's all I can promise. I can't guarantee we can make you money if you join, but appreciate you saying that. Yeah, one-stop shop. That's a good way to put this. One-stop shop. Ow. Eyeball hurts. Oh. Ow. Weird. I must be dying. So, critical last part of our 4-part strategy, we'll look at private markets. No, you dumbasses. You got to be careful with the private, at least not private equity. Yes, HouseHack, but not private equity, man. Like this, the private credit, I should say. Yeah, like some of the zombies, man, scare me. Already, the top 10 private AI companies are collectively worth 1.5 trillion. Wow, that's a lot. 150 bill each. If they were public, the companies would amount for 3% of the S&P 500. Wow. The public small cap market is only worth 3 trillion. Whoa. Yeah, well, the public small cap is scary. Okay. I mean, that's interesting. Okay, so I mean, what they're basically saying, I hate to say it, but what I'm hearing, okay? I'm hearing Mag 7, best upside and least downside. YOLO into, private GPT, Anthropic shares, and or robots. They didn't mention robots. I'll put a Kevin note there. And then they're saying that maybe you could get into some of the utilities. Second part, that's the commodities and the utilities. The third part is the scaling, and the fourth part is private. So that's the 1. That's also the 3. And then this is the 4. And then the 2 comment that they made, I always try to keep this organized so I can figure it out, would be like the SMCI style. Okay, got it. Bro, I gotta go to the bathroom. Okay. Why nothing on jobs, though? Consider the Mag 7 of private markets. Yeah. OpenAI, SpaceX, Anthropic. As I literally just said OpenAI and Anthropic. That's funny. Okay. How do they not give any recession risk in this? This is just a sales pitch at this point. Fragmentation, not globalization. Okay, can we know that the trade thing is a problem, but I want to see jobs. External influence of China. That's no fun. South America, energy, binding constraint. Power-hungry technology has created geopolitical issues, critical minerals. Cryptocurrencies now exceed $4 trillion. We broadly see digital assets gaining favor, driven in part by the search for alternatives to the dollar. The best alternative to the dollar is real estate. I'll take that to the grave, my friends. I really believe that. Like, I don't like the dollar either. But see, the difference between real estate and Bitcoin is that I can rent out and barter that roof for something. I could do something with it. So no matter what the currency is, I could sell it for food, I could sell it for utility, I could sell it for a different currency, I could sell rent for Bitcoin. It doesn't matter to me. I'm currency agnostic with real estate. That's what I think is so great. Okay. Prepare for inflation structural shift. I don't really care about this. Goods inflation is likely to experience some upward pressure, but services inflation seems much more benign. I mean, this is just straight from the Fed, so that's nothing. Structural driver, psychology. Psychology is probably the most risky one. But so far, we haven't embedded longer term. Housing shortage. Yeah, this is huge. Since the global financial crisis, the housing market has underbuilt by 3 to 4 million relative to household formation. Based on this, it could take 10 years to close that gap. We don't build enough homes, baby! Oh, I wonder, did I get my offer accepted? Did I win? Did I win? I don't know if I'm even going to hear anything today. I honestly, I don't think I will. I don't know that I was aggressive enough. There's no news. No news is good news. But I will check. I will check. quick note, : if you need anything from me, like an addendum or any one-pager, I can get you whatever you need pretty quickly, period. New line, Kevin. I'm in the office, on standby anytime. Gotta make sure to take care of my house hack, Holmes. Homes, homies, same thing. Worst housing affordability since the 80s because of the shortage. We expect demand for rental housing to increase. Let's go! Oh, talk bullish to me. Dump the bullishness over me. Dump it all over me. We expect demand for rental housing to increase. Somebody's like, Kevin, what's going to happen when people start moving to Mars for rental demand? Bro, we got the best weather in the world in SoCal. People ain't leaving this. People are coming here. Everybody's coming. I haven't seen so much. Okay, I'm just going to stop. Especially newer homes suitable for family, commuting distance of city centers. Yeah. House hack homies. That's our NFT. Hold on. We're going for it. Create an NFT for House Hack, the real estate startup called House Hack Homies. Let's see what Gemini can give us, and I'll tell you if it's trash. Kevin, what do you think about gold? Yeah, you have to remember, going into a recession, gold skyrockets. We may have already had the gold skyrocket. Coming out of, like when you're actually in a recession, gold tends to fall. Oh, scheisse. Bro, look at this NFT. Oh my God, it's hot. Dude, that's good. Holy smokes, dude. Gemini did that in like 5 seconds, bro. You know how long it would have taken a designer to do this? Dude, this is amazing. And look, we're like DEI. You know, we've got like these people with, like, we got old white guy, you know, we got this person wearing whatever that's called. We got, you know, we got diversity, we got genders, we got race. This is great. They've got backpacks that are homes. This is cool. The House Hack Homies. Holy scheisses, dude. See, we're looking at money on our phone. We got the future over here. Look at this. This is like all backed by the railroad of chips, the railroad to wealth, the House Hack Homies. Let's go. Let's go. We got everything. Somebody's like, DEI. Hey, man, it's Google. What do you expect? So let's see. Places in Richmond, Virginia. Richmond. I mean, you get so much DC traffic out there. I wonder what your population. I'd look at your population growth. And if you guys are booming and not building much, you know, maybe like how much are you guys building over there? And I don't know that I would bet against Richmond, Virginia, honestly. Gemini did that. Yeah, dude. Okay, ask Gemini to remove the DEI. Man, this is racist. Stop this. You guys are going to get me in trouble. Oh, I can't because I don't save the history on it. So I'd have to do it again. All right, I'll do a new one, okay? Create an NFT for the real estate startup House Hack called House Hack Homies, except this time no DEI. Dude, you guys are going to get me canceled. You're an asshole. All right, well, that cooks. Implications for investors. Higher inflation makes it more difficult to maintain purchasing power. Okay, through the end of the decade, over 6 million people will enter the 35 to 49 group. This is the prime age for home buying. Given the extreme gap between the cost to rent and buy, we expect rental demand for housing to increase. Okay, do I have the paid version of Gemini? It depends. I will answer that when it comes. Oh, they just removed all the people. It just literally took all the people out. It's not as cool, man. Dude. Wait, no, I want House Hack Homies. Not House... Wait, did I spell it wrong? Called House Hack... Oh, I spelled it wrong. Oh, sorry. Sorry, I screwed it up. All right, let's try it again. Because it's supposed to be homies. I really like that one. I want to make a sweater with that. It's so good. House Hack Homies. Okay. While bonds can still perform their established role in portfolios, we need to look beyond fixed income. High inflation hurts bonds, blah, blah, blah. Investors need to mitigate inflation risk and manage positive stock correlation. Okay. We have identified 3 asset groups that can deliver. Commodities. Natural gas, a critical input for AI, accounts for 40% of electricity generation. We see opportunities to invest in new gas pipelines. Real estate, such as infrastructure and real estate. Bro, did JP Morgan literally write this? Real estate, such as infrastructure and real estate? This is the largest bank in the world. Real estate, such as infrastructure and real estate. Oh, thank you. You know, it'd be one thing if they said real estate, such as infrastructure and house hack. There, I fixed it for him. Stupid, dude. All right, let's look at the image it came up with. Okay. All right. Are you ready for the anti-DEI version? Why am I having trouble with this? Okay. All right. Gemini's anti-DEI version is ready. Here it is. It's on screen. Oh, wait. Sorry. Wrong picture. It's actually right here. There we go. I don't know. I don't think it understands that it can't top what it did the first time. You know, the top one, this is good. I like this a lot. This is great. This is fantastic. So, anyway. All right. So, okay. Holy smokes, dude. Look at that Q's bounce on my line. Dirty. Dirty. Right on the line. First one's always the best. I know. And I've used different context windows there each time, by the way. Not blown up yet, Goldilocks. Well, that's good, dude. Cody, good for you, man. Okay. Underappreciating asset class, although it has delivered 8 to 12% returns. Long-term inflation-resilient cash flows. We expect an acceleration in the demand for power. Yeah, but like what? Power now accounts for 6%. Okay. So 80% of family offices surveyed say they don't have exposure to their asset class, to this asset class. Global infrastructure. Okay. Global real estate can serve as an inflation hedge. Let's go! Oh, yeah. Helping preserve income as property values rise with land, labor, and material costs. That's right. We see early signs of recovery in real estate. I think they're talking about the areas that got hurt, like commercial real estate. Healthy, highlighting a disconnect in potential opportunities. Strong fundamentals in rentals, and a shift towards renting. Let's go. We think these trends will shape real estate for years to come.
Bullish catalyst.
Email ir@househack.com.
Do any of these work?
This is not personalized financial
Where's House
advice.
Where's my house hack button? I had a house hack button here. I only have this one.
Coupon linked below.
You are not prepared.
I'll have to fix it. All right, what else? Less correlated. Hedge funds. Boring. Let's see. Skilled managers. Idiosyncratic risk creates a fertile environment for security selection. I mean, that's just basically trying to shill, I feel like, their services. To mitigate inflation risk, investors should consider focusing on commodities, real estate, and alternative strategies. Wow. Correlation to inflation. Oh, some fancy shirt. Conclusion, a new frontier for investors. Profound transformation, but also carries the risk of overinvestment and labor disruption. They barely talked about jobs. Inflation remains a persistent threat to purchasing power. I mean, this was actually a really good piece. I gotta give them credit. They didn't talk about the labor market, but let's listen to Trump while I go to the bathroom because I'm gonna blow up.
For $750 million in the U.S. focused on true manufacturing jobs here stateside. We're looking at tripling the output of our Greenville, South Carolina facility, where we make the gas turbines that are supporting U.S. needs as well as the Saudi Arabia needs. Right. So real jobs, $300 million in gas investment, resulting in over 500 pieces of new equipment being installed in the Greenville, South Carolina facility. That translates into roughly 1,800 jobs across the board for GE Vernova as we try to scale capacity to be able to meet this demand. Along with that, we're partnering with local communities to build the skill set that's required to meet these capacity needs. So that talent pipeline is incredibly important. So it's real jobs in the manufacturing space.
Well, you've been great, and thank you very much. And we love that state. I won that state by record numbers. I won a lot of states by record. Texas, a lot of them by Indiana. We're working with Indiana or something right now. We won that. We won a lot of them by records, but that was one of them. I want to thank you very much. Say hello to everybody. Great job. You're doing a great job. Thank you. So just in wrapping up, we'll take a couple of questions, but I want to just tell you what an honor it is to be your friend. And I very much appreciate the investment of now $1 trillion, okay? I'm glad you got that out. I didn't want to be the one to tell them, but that's great news.
You keep increasing, Mr. President.
I know.
Each time the opportunities are just increasing more and more.
Well, the opportunities, right? We're doing better. If even if you look back 6 months ago, I mean, all of a sudden you feel even better. So, and I think we're only going to go in one way. Does anybody have any questions?
Mr. President, have you approved the export licenses for advanced chips to Saudi Arabia? The export licenses?
We are working on that. We're negotiating that right now. Marco, do you want to talk about that, or Scott?
Yeah, well, I mean, that's part of what we may have announcements on that later today. But that's what we've been working on is the mechanics by which something like that could be achieved. And it's part of the broader process, part of this broader engagement and cooperation between our two countries.
Certain levels of chips. Yeah.
And for the Crown Prince, Your Royal Highness, you're talking about $1 trillion of investment. Could the kingdom continue to do that with oil prices in the mid-60s?
Yeah, we are not creating a fake opportunities to, please America, please President Trump. It's real opportunities. For example, when you ask about the AI and the chips, Saudi Arabia have a huge demand a huge need of computing power, and we're gonna spend in the short term around $50 billion.
Bro, look at that bounce at 595, by the way. Holy smokes, it's a nearly perfect bounce.
That we're gonna have with South America that will allow us to focus that consuming power in the short term by $50 billion from the South America, and long term with hundreds of $billions in the long term. So there's a lot of real opportunities that fit to our need in Saudi Arabia and fit to our investment strategy.
Mr. President, is it appropriate, Mr. President, for your family to be doing business in Saudi Arabia while you're president? Is that a conflict of interest? And Your Royal Highness, the U.S. intelligence concluded that you orchestrated the brutal murder of a journalist. 9/11 families are furious that you are here in the Oval Office. Why should Americans trust you? Who are you with? And the same to you, Mr. President.
Now, who are you with?
I'm with ABC News, sir.
You're with who?
ABC News, sir.
Fake news. ABC fake news. One of the worst in the business. But I'll answer your question. I have nothing to do with the family business. I have left, and when I've devoted 100% of my energy. What my family does is fine. They do business all over. They've done very little with Saudi Arabia, actually. I'm sure they could do a lot. And anything they've done has been very good. That's what we've done. We've built a tremendous business for a long time. I've been very successful. I decided to leave that success behind and make America very successful. And I've made America more successful by far than it ever was, and that it ever could have been, no matter who was president. There would be nobody bringing in $21 trillion, that I can tell you right now. As far as this gentleman is concerned, he's done a phenomenal job. You're mentioning somebody that was extremely controversial. A lot of people didn't like that gentleman that you're talking about. Whether you like him or didn't like him, things happen. But he knew nothing about it, and we can leave it at that. You don't have to embarrass our guest by asking a question like that.
Just yes, Mr. President,
Please,
allow me to answer. You know, I feel painful about, the families of 9/11 in America, but, we have to focus on reality. Reality based on CIA documents and based on a lot of documents that Osama bin Laden used Saudi people in that event for one main purpose, is to destroy this relation, to destroy the American-Saudi relation. That's the purpose of 9/11. So whoever buying that means they are helping Osama bin Laden's purpose of destroying this relation. He knows that strong relation between America and Saudi Arabia, it's bad for extremism, it's bad for terrorism. And we have to approve him wrong and to build our relation, to continue developing our relation. It's critical in the safety of the world. It's critical against extremism and terrorism. About the journalists, it's really painful to hear, anyone that been losing his life for, no real purpose or nothing illegal way. And it's been painful for us in Saudi Arabia. We've did all the right steps of investigation, etc. in Saudi Arabia, and we've improved our system to be sure that nothing happened like that. And it's painful and it's a huge mistake, and we are doing our best that this doesn't happen again.
Mr. President, thank you, Mr. President. The Crown Prince has been instrumental in helping lifting the sanctions on Syria. Will there be any joint investment between the U.S. and Syria? And will you visit Damascus?
Are you from Syria?
No, but
Where are you from?
I'm from Palestine.
Oh, making a lot of progress, huh? Very good. Well, they like me. The Palestinians like me. The Palestinians are doing very well, actually. I think we're working very closely with a lot of people to make everybody happy, including Israel, the Palestinians, and everybody. That's very interesting. No, I think that I will tell you, the Crown Prince called me, and he specifically asked me if I would lift the sanctions on Syria, because he wants to see Syria make it. As you know, the leader of Syria was just here. We had a great meeting, and he's a strong guy, and I guess you need a strong person to run it. And I think Syria's made tremendous progress. We did lift the sanctions at the request of the Crown Prince. Also, the president of Turkey, Erdogan, called me specifically. He said, if you don't lift the sanctions, Syria doesn't have a chance. If you do, they have a very good chance. And between the two of them and some others, I lifted the sanctions. And the results so far have been pretty good.
Mr. President, can I ask you a question about the F-35s that are being sold to Saudi Arabia? Are these the same ones that are being used by the Israeli military? And if so, how does that allow for the qualitative military edge for Israel? And then I want to ask you, because you brought up the plight of the Palestinians, are you aware of relocation flights to South Africa that are taking place right now?
Which flights?
There are relocation flights that are taking place. Some Palestinians are being charged up to $2,000 a seat.
I'm not going to South Africa for the G20 because I think their policies on the extermination of people are unacceptable. So I'm not going, so I won't refer to anything having to do with South Africa. South Africa has behaved extremely badly. But I will say that
you've been a bad boy.
the F-35, and you're asking me, is it the same? I think it's going to be pretty similar. Yeah,
how will that?
This is a great ally, and Israel's a great ally. And I know they'd like you to get planes of reduced caliber. I don't think that makes you too happy. They've been a great ally. Israel's been a great ally, and we're looking at that exactly right now. But as far as I'm concerned, I think they are both at a level where they should get top of the line. Yes, please.
Can I just quickly ask for the Crown Prince, if I could just ask about the direct talks between U.S.
It's all right. Steve, 1 second. Go ahead.
Have you reached an agreement on a U.S.-Saudi defense treaty today? And are you going to bring up the Abraham Accords in your discussion?
I already brought them up.
What did you say?
I think I got a positive response. Would you like to respond?
Yeah, so definitely we believe having a good relation with all Middle Eastern countries, it's a good thing. And we want to be part of the Abraham Accord, but we want also to be sure that we secure a clear path of two-state solution. And today we have a healthy discussion with Mr. President that we're going to work on that to be sure that we can prepare the right situation as soon as possible to have that.
I think we're, I don't want to use the word commitment, but we've had a very good talk on the Abraham Accords. We talked about one state, two state. We talked about a lot of things in a short period of time. We'll be discussing it further, too. But I think you have a very good feeling toward the Abraham Accords.
Yes, definitely, Mr. President. We want peace for the Israelis. We want peace for the Palestinians. We want them to coexist peacefully in the region. And we will do our best to reach that day.
And the defense agreement, have you reached agreement on that?
We pretty much have.
Quick question for the Crown Prince, if I could just finish.
We have reached agreement on that.
Okay.
I wanted to ask you about the direct talks between the United States and Iran. Have you been fully briefed on that, and are you concerned at all about how this might impact Saudi security interests?
Well, we are close allies. We'll be working closely together on that issue, and we will do our best to help to reach a deal between the United States of America and Iran. And we believe it's good for Iran's future to have a good deal that will satisfy the region and the world and the United States of America. So we will do our best to see that day happen.
And by the way, Iran does want to make a deal. I can say I think they very badly want to make a deal. I am totally open to it, and we're talking to them, and we start a process. But it would be a nice thing to have a deal with Iran, and we could have done it before the war, but that didn't work out. And something will happen there, I think. But they would very much like, they may say something else, but they would very much like to have a deal.
Mr. President, you announced that you are going to sell 35 F-35 jets. You said you are planning to sell the F-35 jets to Saudi Arabia.
Yeah.
Is it part of the security agreement? And how you assess the defense partnership between Saudi Arabia and the United States? And the question for
Well, no, I just said it, though. We're going to sell them F-35s. That's the end of the question, I guess.
Is it part of the security agreement or no?
No, we're going to have a deal. They're going to
Tesla 407, by the way. Nice recovery up here.
And it's a great plane. We make, by the way, the best military equipment. You saw that during the Iran little skirmish. We make the best planes, the best missiles. We make the best defensive missiles. We make the best military equipment in the world.
Nice. For His Royal Highness, I would like to ask you about how you see the cooperation between the United States and Saudi Arabia in the advanced technological field, especially AI, and how it will support Saudi Arabia to serve its goals to achieve the vision of 2030.
Well, I will try to answer that in short, but definitely there's a lot of interest in many industries between Saudi Arabia and America, and we are signing a lot of agreements in different areas that will really add value to American economy, but also it will add value to us in Saudi Arabia. And AI, it's critical for us because one of long-term problems that we could have is lack of workforce. As you've seen in the past few years, some of them have reached 30% of the global migration to Saudi Arabia. So we know that to assure the Saudi Arabia GDP growing with the lack of workforce that we have, we need to use a lot of computing power to replace job in the long term. So that's huge demand in Saudi Arabia, and we want to link it to American private sectors and getting the supply from America. So there's a lot of opportunities in that area.
And we're also involved in AI in Saudi Arabia. So we're working, and we're leading by a lot on AI. Actually a lot. China would be in second place, but we're leading by a lot. And I have to say this, and our relationship with China has been very good. And as far as buying our farm products, they're pretty much on schedule, Scott. I'd like you to call them, say if they could speed it up, it would be good. Okay, but they're pretty much on schedule.
Please. If I may, I have a question for both the Crown Prince and President.
Who are you?
Faisal Abbas from Arab News, Saudi Arabia, Your Excellency.
It should be a friendly question.
Your Royal Highness, just picking up on something you've just mentioned about how some people try to destroy the relationship between Saudi Arabia and the United States. Perhaps, since the launch of the vision, we've been used to having the bigger picture and that everything fits into the bigger picture. Might you want to elaborate a little bit about where is the relationship, the bilateral relationship, the strategic partnership between Saudi Arabia and the United States heading, and what's the big picture there?
Well, I don't think it's a relation that we can replace it from the Saudi side or the American side. It's a critical relationship for our political attempt, for our economical attempt, for our security, for our military, for many things. And it has been there for 9 decades. And the opportunities that we have today, it's huge. And it seems that it's going to get deeper in the next few decades. And what we are having today and tomorrow with President Trump, it's really a huge new chapter in this relation that will add value to both of us.
You know, when you think about it, I'm just sitting here. You're with the future king, a man who's respected by everybody, a man that doesn't have to be doing this, really. I don't have to be doing it either. And yet we're sitting here taking questions, we didn't say, oh, you can't talk about this. And there's never been transparency like this, even in his country, but there's never been, in our country, that's been acknowledged. But we didn't put restrictions, and I'm saying it's sort of wonderful to be taking questions from all over the world. Everybody's here. This is just a small group representative of tremendous numbers of media that are outside that are very jealous that these people were so selected. But they're representing a lot of people that are outside. I think it's terrific that we can be sitting here being this open, and I think it's really a wonderful thing.
If you don't mind, I have a personal question for you.
Okay, here we go.
So apart from everything you mentioned in your opening remarks, you forgot to mention that you've de-escalated 7 wars since you started. At least in our part of the world, you are seen as a peacemaker. And adding that to all the executive orders and everything else you've mentioned, I really have to wonder, in your speech in Saudi Arabia, I was there, you said that His Royal Highness does not sleep at night thinking how he does things better. We wonder in Saudi Arabia, how do you manage your own time, and what's your formula for management?
He does not sleep much, and I don't sleep much. I think we have the same schedule. We're thinking about our countries. And if you sleep a lot and you're president, we just had one that slept more than any president. He broke every record. He sleeps all the time, during the day, during the night, on the beach.
I'll watch to see if there's any actual news coming out of this, but so far it doesn't actually look like we're really getting news from this right now. So I'll keep an eye on this. But there are a few things that I want to look at, and we're going to go through these in detail here. Beautiful bounce, by the way, on the Qs at 595. I'm hoping we can go green today, and Tesla's making its way back to 414. So let's go ahead and get through some of these data pieces, because we got another piece here on the fund manager survey, and so we're gonna cover all this. Let's go ahead and close this nonsense, just in case the little baby starts screaming, and it's not a problem for us. You never know. Sometimes they just start screaming out of nowhere. But I mean, look at this in the meantime. Q's right here, 595. We lost it for a little bit here. Regained, bounced off of it again. Kind of shows some support coming in for equities. Maybe we could get a little rally into the close. Wouldn't that be great? If we get a rally into the close, Tesla will go 414 into the close. We'll be able to print some money. AMD holding 232 as well. Pretty important. All right. So, let's see what we got. Bank of America is now warning that cash levels have fallen to such a low point that out of every single time in the last 20 times this has occurred, on every single occasion, stocks fell and treasury bonds outperformed in the following 1 to 3 months. Cash levels are now at just 3.7% in the fund manager survey, and Bank of America is citing this as a warning sign. Now, JP Morgan has this massive report on the outlook for 2026, which we're going to break down as well so we can see where the minds of investors are today, because we've got this crazy duality going on. Stocks are red and they're trying to recover. We've got people worried about recession on one side, others seeing it as a buying opportunity. I'll tell you, this morning, I have to say, I bought some of the dip. The Qs had a glorious dip and AMD lost that 232 line as our strategy this morning. I actually bought a short-term call option as well as buying the dip. But in the alpha report this morning, we bought some longer plays and a short-term call option in some of the mess we saw over here on the Qs. We're now regaining, bouncing off 595, and we're also seeing a reduction in the VIX down from 10% down to just 5%. And in addition to that, a critical line to pay attention to for bullishness right here on AMD. You want to see AMD above 232 to reiterate short-term enthusiasm. Anyway, if you want all of those alerts and insights and perspectives, make sure you join the Alpha Report over at meetkevin.com. So let's look at some of these reports that we're getting. So Bank of America is telling us, hey, fund manager cash is so low. Is this bearish? Well, yes, it is short-term bearish, but it could create some short-term opportunities. See, what you really need is investor sentiment to kind of cool off of this 9-month high that we've been on. We've had now 4 days in a row of red. We might end up going green towards the end of the day today. We'll see. We've got a nice bounce here at 595, which is bullish. And you can join in on that over at meetkevin.com. You pay once, you get lifetime access for it, so we think it's a great bargain. But anyway, take a look at this. The Fund Manager Survey investor sentiment shows us at 9-month highs. Usually, when we come off of these highs, we're able to create dip buy opportunities. Dip buy opportunities, assuming we're not falling into a recession. And obviously, the biggest factor that would elevate us into recessionary concerns would be jobs. But that ADP report this morning of negative 2,500 jobs on the 4-week moving average, that's pretty close to zero, which is probably where our break-even employment rate is right now. Which is to say that, yes, immigration has really slowed down the drivers of employment, but even factoring in the joblessness that you got announced from Target or Amazon or some of the other layoffs we saw at the end of October, we're not really that far from zero. We're not falling off a cliff, which is good, which means maybe this short-term 4-day dip buy or a dip we're getting here is a dip buy opportunity. Maybe people are finally gonna build up some cash again. This is a great opportunity for people who have already been building cash and staying out of margin. Sentiment is pretty elevated, at least according to the Fund Manager Survey. And this Fund Manager Survey was released today, so it's still timely. You can see that here, November 18th. Now, in terms of positioning, though, this is probably where you still, because I did also have a sell order that I posted this morning, because I'm selling in one place and I'm reallocating. And I'm still selling a bit more on net than I'm buying, mostly because where I'm selling, I've that stock has returned over probably 12x, or actually I think it's closer to 16x since I bought it in 22. But anyway, look at this. This is positioning right now. Investors are bullish Goldilocks, with 53% of people expecting a soft landing and 37% expecting no landing. Only 6% are expecting a hard landing. So you don't actually have a lot of investors in this market pricing in a recession. I actually don't think markets are pricing in recession at all. What you're really getting right now is a bit of a breather of sort of a cash raise. That's what you're seeing right here over the last 4 or 5 days. Actually, I mean, really, you've seen this all of November, this slow bleed down. We've had some more days in a row of red over here, but you've seen this bleed down as a way of raising cash, and some of that is kind of normal. We see that cycle in the market, but we're not by any means seeing recessionary pricing in risk assets at all. And it makes sense because people are still bullish, soft landing or no landing. Great. I'm still 50-50 on whether we're slow bleeding or soft landing. But anyway, for the first time in 20 years, investors are now saying that there's a risk that companies are over-investing. And the biggest concerns for market investors right now, 45% say AI bubble, with the number one risk at 59% being some form of private credit event. This is because, following the BlackRock write-down on their renovation roll-up, Renovo Homes, the hotels like Sonder Homes going bankrupt, way upside down on their debts, the Ritz-Carlton developer going bankrupt after getting rug pulled by their private credit lender, the Tricolor bankruptcies, the First Brands bankruptcies, the failures of finance receivables auditing at PwC. Like, what the hell? Why aren't the auditors catching this? The reminiscence of what we're seeing with, oh, everything's triple rated, A+, we're good here. Right. But we're not actually seeing the big four rating firms doing most of the AAA rating right now. Most of the ratings are actually in private credit coming from smaller firms who are maybe fudging some of the ratings a little bit. That's why one of the reasons with our real estate startup, we use the highest standards for auditing. PCAOBs, like First Brands didn't use that. Tricolor didn't use that. X doesn't even use that. Elon Musk's X doesn't even use the PCAOB audit. Because you can kind of get away with a little bit more. PCAOB, those are pretty stringent audits. But most people aren't going to do that because they don't want that level of transparency, and those are the underlying risk, and the market sees that, and that's all driving some of the nervousness and desire to raise cash. I think it's smart to get out of debt. Do I think you have to run? Not necessarily, but minimizing your margin exposure, great. Long Mag 7, though, being considered a crowded trade. Now, what does JP Morgan have to say about that? So JP Morgan actually has a response about this Long Mag 7 being too crowded, argument. And I actually think they did a good job here. I will tell you, out of this entire report that we've gone through, this 2026 report, they do a horrible job about talking about the labor market. All they do, and I feel like they're gaslighting us. I don't really like JP Morgan. I will give them credit where credit is due. I like the Sapphire, but honestly, I prefer the Venture X card. And I think Amex has really lost the lead in their travel cards. I don't think you could trust JP Morgan as a bank. If you're business banking with JP Morgan, I think there's a real likelihood you could get rug pulled at the worst time. That doesn't matter to me. I don't have any bank debt. My business doesn't have any bank debt. Like, it doesn't matter to us. I'm just saying, I think be careful with JP Morgan. I don't trust them. And I feel like while they do say some things here that I think are valid, they gaslight us on jobs. Basically, in their report, all they do is they talk about, hey guys, in the Industrial Revolution, technology basically created jobs. So, AI's got to be good for jobs too. Yeah, no duh, bro. Yes, in the long term, AI will create jobs. But I don't care that AI is going to create jobs in 10 years from now. I'm worried about what's happening over the next 2 years because I don't want to go into an unemployment recession. And JP Morgan, you're not even addressing the weakness in the labor market. In fact, you're literally saying the opposite. We see limited evidence that AI has impacted the labor market yet. That's a red flag. Mind you, they don't actually go down that rabbit hole. They do not want any of their clients selling. And I think that's just a bias you have to understand with JP Morgan. They do not want their clients selling. I mean, they literally go bullish crypto in this piece. Right here, look at this. We note burgeoning competition to the dollar from digital operations such as cryptocurrency, with market cap of $4 trillion now exceeding the $2 trillion at the start of 2024. Investors are looking to crypto as a potential store of value, now with a more friendly regulatory regime. It sounds like an ad. I feel like, Jamie Dimon's walking through the office going, hey guys, we can help you with crypto now too. We've got bullish tailwinds for a regulatory regime, what, blah, blah, blah. I mean, you get what I'm trying to say. Like, it's a very bullish sales pitch, and it makes me a little nervous that it's too bullish, but primarily because they totally ignore that jobs are weakening. There's no question that jobs are weakening. No question there at all. The hope, and this is the hopium, the hope is that we can rebound, right? Is that we can see job growth start booming again and start picking up as we get through the holidays and into January of next year. Now, hopes don't always create the best investment strategies, though. Consider Home Depot and Six Flags both reported that they hoped that Q3 and Q4 would be better. Okay? what ended up happening? Well, what we ended up getting was after Labor Day, Six Flags told us demand trends are slowing. And they ended up telling us that the reason traffic was down 11% was because of bad weather. And then Home Depot's like, yeah, we actually had too much good weather. So therefore, people didn't have to fix up their homes as much. And that's why our sales are down. And that's why we're reducing guidance. And I'm like, okay, fine. Maybe the weather was not bad enough to drive sales at Home Depot and not good enough to drive sales at Six Flags. But the point is the consumer's suffering, right? And JP Morgan's kind of ignoring that whole labor aspect because a good labor market drives consumer spending, right? So with that said, let's look at actually some of the components that I do think they provide fair points on, okay? So this is now the more bullish part, okay? They say that many of their clients at JP Morgan are holding more cash than they did before the pandemic. And so I call this contrarian bullish, right? Unlike the Bank of America Fund Manager Survey where cash levels are so low, this actually seems contrarian bullish. This is bearish right here, which is, we're capping out on AI model progress, but they think that agents will take over. I don't think so. I think we're probably capping out on like the AI chatbot encyclopedia progress, and now it's just a matter of turning that into revenues. That said, in fairness, I do think they make some valid points. Right now, if you compare AI spending today to the dot-com bubble, we're only spending around 1% of GDP right now. It's going to increase. It's going to increase. In my opinion, it's already going to plan to be closer to 4 to 5% of GDP. I mean, think about GDP is about, $24 trillion. So 24 trillion times, call it 5%. That's about $1.2 trillion a year. We're probably closer to about 2.5% of GDP actually being spent right now, $500 billion a year, right? I mean, look at NVIDIA. They're going to forecast $500 billion of a backlog when they report earnings soon, which is when we're expiring the coupon code for the Meet Kevin Alpha report. Coupon code's actually NVDA, NVIDIA, right? Their ticker symbol. But anyway, they say current AI investment is around 1%. They say that investment tends to peak around 2 to 5% of GDP. Okay. I probably think we're somewhere around 2.5 right now, but we'll see. And they also say that a lot of the CapEx right now is still being driven by earnings. And they're right. They do rightly reference that there are bubbles in history. Tulip mania, Japanese asset bubble, subprime mortgage crisis. But in fairness, I didn't know this. I think this is a good point. The Oracle, which I wouldn't touch with a 10-foot pole, Oracle was 5x oversubscribed for their bond. That's crazy to me. Yesterday, you had Amazon talk about a $15 billion new bond subscription. Today, you had an Azure and Anthropic announcement. These are big investments that are still going on. And in fairness, they are being driven by cash flows. They say that right here. AI spending today is fueled by cash flows. They are right about that. Now, those cash flows are going to zero. Like you look at Amazon, their free cash flow is almost indistinguishable from zero now because they're investing so much. But this is so much in contrast to the bubble that you saw in the early dot-com era where companies were going public with no revenues and you weren't financing the boom by cash flows, which you are today. And so they make this really interesting point. First, they point out that if you look at the IPO market, there's no sign of exuberance here. IPOs recently have not been doing that great. I mean, I was bearish on some of, a lot of these different IPOs, but look at Circle, for example. Circle IPO, skyrocket, memed up, tanks. Look at another one here. If you go to Webull, dude, look at this bleed out on Webull. Not great. Some of these recent IPOs have just been tanking. Not great. Ooh, Q's still recovering. Well, I'm glad I bought the dip this morning. But, that's potentially a sign that maybe we're not at that euphoric part of the Nike swoosh yet. Jeffrey Gondlock had a really good point in an interview yesterday. He said, he went bearish on tech in 1999, and then the S&P 500, after he went bearish, rallied like another 80%. And he's like, well, Well, that doesn't look good. Now, obviously, he ended up being right to be bearish, but there is a suggestion that maybe there's still a bubble ahead of us, not behind us. And that's what JP Morgan is arguing. See, JP Morgan says here, the biggest risk to us is not having exposure. Now, I have to be careful here. I feel like this could be a ShamWow style sales pitch, okay? Now, don't get me wrong. I like to pitch as well. We're going to talk about real estate in just a moment. And I love pitching my real estate startup because y'all have invested like $1.3 million in this company in November alone, okay? It's crazy. I mean, we're offering a 5% yield. You get 100% upside on the stock. Our valuation is based on a valuation we did when our expenses were way higher and we had no AI product. That's what our valuation is based off of, August 2024. No AI product that, we were thinking about selling, and expenses that were way higher. We cut a lot of expenses, and I feel like we're in a really great place right now. We're still offering that 5% yield. You get 100% of the upside. Obviously, read the offering circular. You can read about our AI product as well that we're going to be launching soon, which is really exciting at reinvest.co. Again, read the disclosures. You could see the real estate. We got to update this real estate section with the new 11 properties we just bought. I can't wait to do that. But we're in the middle of remodels on 11 different fixer-uppers right now. It's crazy. We might be up at 12 soon. I guess I'll know later today. But anyway, so I get it. There's a sales pitch aspect that JP Morgan is doing as well. And you kind of have to reconcile that here. They don't want their clients to sell, right? They don't want their clients to sell out. So, if I was going to do a Gemini put together a ShamWow pitch, Gemini says I should read the following. Are you tired of market turbulence? Is globalization leaving your portfolio wet with risk? Stop. You need the JP Morgan 2026 Outlook. This report instantly soaks up the three biggest threats. AI, the massive boom is not a bubble. We tell you where the $1 trillion value is hiding. Fragmentation? Forget cheap. We'll show you huge profits in nearshoring. And inflation? Ha! Cash might be leaking value. So get yourself some real assets. So don't let your portfolio get wiped out. Check out the JP Morgan 2026 Outlook. Gemini slapped together that for me really quickly. But I say that half-heartedly because you have to know, you have to look at these JP Morgan reports. I mean, look at this. They put a beautiful leather binder on this. It's a sales pitch to some extent. Please don't sell your assets, right? All right, I get it. They're the biggest asset manager in the world. But it is interesting to me because they argue that the bubble could actually be ahead of us. Look at this. When we consider the evidence, it seems clear that the ingredients for a market bubble are present. That said, we think the risk is that the bubble is in the future, not in the past. Kind of interesting. So, what does JP Morgan recommend? Okay, so JP Morgan does the following. This is their strategy. And I've boiled this down because I don't think they do a really good job in their piece. So I've simplified this, okay? I've simplified to this. Mag 7, super microcomputer and infrastructure that's undervalued relative to the others that are still highly valued, like a Vertiv, but still they pitch water cooling. Then Mag 7, and then YOLO into GPT or Anthropic shares. And Databricks or the private market. That's roughly what they're saying here. Now, you could pause this and look at this on screen, but here they basically say that Microsoft, Meta, Alphabet, their valuation premiums are justified. In fairness, I kind of agree that companies like Meta and even Netflix, which I think Netflix will benefit from a boom in advertising to get these LLMs pitched, I actually think those are cheap right now. That's just my opinion, not personalized advice, obviously. But so they say they're optimistic that these valuations are justified. They're bullish on these various different plays. They also think, when I go to number 3 here, they think that Google basically can compound AI integrations a lot better than a lot of other companies can because they're so vertically integrated. They're kind of like that one-stop shop. And so when we looked at this the first time, I made this analogy about how if I go into my Google Drive, I could click on our House Hack offering circular and I can click AI voiceover, and they will do a podcast to explain a PDF to me as a podcast. It was crazy. Like, I gave this analogy because we were looking at this in the office. We're like, this is really good. They have like this man and a woman debating our offering circular. Oh yeah, they expect to make money from these different verticals. One of them, for example, buying what they call wedge deals, which are under market deals. And then they have like the lady interject, wedge deals? Yeah, because they think there's a wedge in the market value of the properties they're buying. And I'm like, this is crazy, right? Like, so I get it. You know, they also say, you know, so that's why they like the Mag 7 still, even though there's a lot of concentration risk there. But they also think that there are opportunities in other companies like the AI enablers. I think some of the AI enablers, you know, obviously the NVIDIAs, the Supermicros, the Vertivs, the MUs, the Microns, the MP Materials or whatever. Some of these are still very highly valued. I think MP is a little bit of a bubble. I think it can have a short-term bounce, but I still think it's going to trend to $31. So I don't want to go long on MP Material. But I do think like a Supermicro is probably less risky than betting on the consumer right now, whether it's Fun, Dave & Buster's, Chipotle, Home Depot, Target. You know, it's tempting because they're getting cheap, but maybe they're cheap for a reason, right? And then, of course, they talk about the private markets, which you want to always be careful with the private markets because of the risk that, you know, companies are really high in debt, which obviously is personally, I'm obviously biased here, why I'm throwing more money at my own real estate startup because I'm like, okay, I don't have the risk of debt at this company. The company owns no bank debt. Like, it's massively protected, I feel like, with so much real estate and cash in the bank. So I really like that. Plus, obviously, you know, we're going to be releasing our AI product, which some of you were happy in the chat. I was talking about this. We're going to release our super early beta for the Wedge Finder. We're going to call it the Reinvest AI, which will help score kind of real estate for people to prioritize when they go look to buy it. And because we think people will buy real estate, you know, over the next 3 to 5 years, I kind of want to sell, like right now as we start the product, a membership that gives you access for like 3 to 4 years at a really cheap basis on a monthly basis. Mostly because that'll give us cash to really double down on investing in the AI to make it even better. Because we want to, you know, not just value single families, but then value renovations, how you can boost your net worth, do the valuation work for you. We're really excited about what we could do with our AI. But anyway, a little tangential there. So this is JP Morgan's take here. You know, they still believe throwing money at OpenAI, SpaceX, Anthropic, Databricks, or like these private startups. I get that. Yeah, I have a venture capital company, and we invested into this company called Apptronik. And Apptronik's a humanoid robot developer. And I visited them in, I think it was 2023. And I made an investment into them. And then my VC made an investment into them. And now Google backed Apptronik in talks to raise funding at $5 billion valuation. If they pull off that $5 billion valuation, I think I'm like 20x on my first investment and like, you know, probably 3 or 4x, depends what the valuation and dilution ends up being on the VC investment. It's pretty crazy. But yeah, I mean, I get why JP Morgan is talking about these private opportunities because private companies, you know, they can multiple X really fast. Like somebody left me a comment yesterday. They're like, Kevin, all these AI plays like NVIDIA, they're going to 5X in the next 5 years. And I'm like, you think NVIDIA is going to go from a $5 trillion market cap to a $25 trillion market cap? That's crazy because that's literally 100% of GDP. Wow. I mean, I get you're bullish, but wow. Like, I'm bullish to the sense that, like, I'll buy the dip on an opportunity, right? Like, I sent alerts this morning. I'm like, hey, guys, I'm buying the dip on this. I'm buying some of, you know, my 10-year play. I'm selling some that's not part of my 10-year play. And, you know, I'm buying a call option, right? Like, that's in our alpha report this morning. So, I get it. But am I of this mindset of like, oh guys, all in, 100% margin? No. Yeah, if you look at, and this is the sentiment right now you want to be careful of, look at this, dude. I had a guy I saw on Twitter yesterday, on X. He literally posted this. He posts, deployed margin, F it. I'm either working at McDonald's next year or I'll be filthy rich. And apparently the guy deployed margin on Robinhood. And I'm like, we just hit the F-it deployed margin stage of the cycle. And I'm like, dude, look at this. Like, Robinhood's down 22% from peak, but it's had this crazy run. And the guy's yeeting in on margin at this point. Like, great. Maybe it'll work out today. I don't know. Maybe Hood's green today. It's not. It's flat. Flat's better than red, I guess. That's fine. Maybe it'll work out day over day. But, dude, you know, to YOLO into margin when this is what the week chart looks like, I don't know, man. You know, it's not the kind of risk aversion I like. You know, I like being a little bit more careful. So anyway, something else that is wild about JP Morgan is then, of course, they talk about infrastructure. They talk about investing in oil and natural gas. They really like natural gas plays, and they think that natural gas plays are really under allocated to right now. They like crypto, but there's actually something else. They talk about hedging against inflation. Now, this is not a surprise. You know, goods inflation is likely to experience some upward pressure from tariffs. Services inflation seems much more benign. Okay, they took that right from the Federal Reserve's playbook, right? But something else. Look at this. I got really excited about this. Now, I could be biased, okay? Your house hack CEO here, reinvest, okay? Maybe a little biased, but the U.S. housing market shortage. Let me just read you their words. We estimate that since the global financial crisis, the United States has underbuilt houses by 3 to 4 million units relative to household formation. Based on current trends, it could take 10 years to close the gap. But by the end of the decade, so in 5 years, over 6 million new people will enter the 35 to 49 age group, which is the prime age for home buying. Given the extreme gap between the cost to rent and the cost to buy, we expect demand for rental housing to increase, especially in newer homes suitable for families within commuting distances for city centers.
Bullish catalyst.
I like that. It's why I am investing and plowing money into real estate.
I think that Kevin's a brilliant guy, and I think that we'd all be very lucky to have him.
Kevin's somebody we'd consider. Kevin is fantastic. Kevin is very talented, but I don't know if it's going to be him, but he's a very talented guy.
But it's not just because of this rental demand. It's also because they think that real estate is a really good inflation hedge. It's actually what I've always loved about real estate is I see real estate as an inflation hedge. I don't care about currencies. I care about the fact that so many people don't want to deal with tenants and toilets, but I do. I love toilets. I love rats. I love dealing with mold. Maybe because I'm insane. Fine. But somebody's got to do it. Somebody's got to have the balls to do it. The cool thing is if you invest in House Hack, I'll do it for you. But anyway, so they say that to protect against longer-term inflation, you can invest in commodities. Specifically, they like natural gas. Then they say real assets such as infrastructure and real estate. Okay, fine. So I like real assets like House Hack. But okay, I'm biased again. But anyway, they say, we expect an acceleration in demand for power driven by electrification. We think people are under-allocated to natural gas specifically, they say. They think that real estate serves as a great inflation hedge through rent escalators and frequent lease resets, and property values rise with land, labor costs, and material costs, which is good. They also think that the multifamily slump is bottoming out in those overbuilt markets like Texas and Florida, and even the commercial sector they think is bottoming out. So they think this is a good trend for reshaping real estate for years to come. Okay. And then they look for, you know, basically stock picking and how they think hedge funds will do well and their bearish bonds. Okay. Honestly, that was a really pretty interesting JP Morgan piece. I think they totally are monkey see no evil on recession. That's what JP Morgan is on recession, right? Like they do not talk at all about the jobs risk. But outside of the labor market risk, I think it's actually kind of interesting. You know, I had somebody leave me a reasonable comment the other day. They said, Kevin, if we do have a labor market risk, doesn't that create problems potentially for rental housing? And the answer to that I used is based on what we saw in 2008. We actually saw rental demand increase during the Great Recession after layoffs. And specifically, you see it amongst higher credit households. So we have very stringent credit score standards to rent from us. So we really vet our clients, our customers, we call them, really well, our tenants. And we find that when people do lose their jobs and they rent from us, they move and they leave the property in often better condition than we rented it to them in, and we just rent it to somebody else. Or they have enough cash reserves to go find another job. We also find that rental demand usually goes up in recessions, not down. More people are renting because they're not buying homes because they can't qualify for a home, even when rates are going down. So we generally feel relatively insulated when it comes to recessions, especially if you don't have callable kind of bank debt, right? Now, of course, investor positioning, who is this? This was Citibank. Citibank says that investor positioning is a little mixed right now with some of the bullishness on NASDAQ declining over the last few days. I know, we've seen that. I think some of it's a little overblown. It's why I think that 595 level has been a nice shelf for us, which is good. We called that out in the Alpha report this morning. It did slip a little bit below it, but now we're riding it really nicely. So I think the buy the dip was well timed. Broadly, if we don't have a recession, I think JP Morgan, I hate to give them credit, but I think they're probably right. The vertical integration that you're seeing at some of the Mag 7 is a valid argument. I also think that the advertising demand that you're going to see at companies like Netflix is going to blow up, and I think they're cheap. I think actually Meta's a little on the cheap side as well, and I think Meta and to some extent Google are going to be big beneficiaries of this desire to advertise AI products and to find new customers. And I don't think you're actually really seeing that priced into markets right now. I'd like to say that Trade Desk would be a beneficiary of the advertising boom. I don't know that they will be. I almost think that Pinterest could be a better beneficiary, but you're also heavily reliant on the consumer over there. So we'll see. A little riskier plays to get into. Look at Pinterest. Look at Pinterest stock. It's insane. But their AI ads engine is pretty good. And look at where they're sitting right now. See this uptrend? This is a week chart. We're on this very long-term uptrend right here that has been going on for 5 years. And we're bouncing off the low portion of that uptrend. Kind of tempting, will say, kind of tempting. So anyway, hey, check out the Alpha report. I think JP Morgan's got a point on real estate, on commodities, and the Mag 7. Some of the private credit trades I think are overvalued. I think SpaceX is getting real competition here. I'm not the biggest fan of what I'm seeing with SpaceX, positioning. But I'm also invested in SpaceX. I'm just like, does it make sense to invest more at this point? I don't know. I feel like we're a little on the frothy side. But hey, I know there's a lot of enthusiasm around Elon Musk. And broadly, I think, while it's a relatively slow news day, everybody's kind of twiddling their thumb to see if we're going to end up getting a flip over here on the shock level of the 10-2 curve. Wow. We actually saw live Donald Trump get asked by the ABC reporter over the Epstein files, and apparently now Trump is calling to revoke ABC's license for asking an unflattering question. Classic. Oh my goodness gracious. Anyway, that's my take on what's going on out there. So I got some stuff I got to do now. I keep getting a crap load of notifications here, so I'm gonna go do some house hack work and some other business. So I appreciate y'all. I love y'all, and we'll see you in the next one.